Hi everyone, welcome to a new episode of Crypto Tips. My name is Heidi and today we're going to talk about the Grayscale Bitcoin Trust Fund, GBTC. Grayscale has been getting a lot of attention lately, and maybe rightfully so, just purely for the fact of how much Bitcoin they're owning. So we're going to get into all the details, all the nitty-gritty. If you guys are interested in this, if you appreciate these videos and you like this channel, I appreciate it if you hit the like button and hit subscribe to get your daily fix of all things crypto. Yes, these videos are coming out every single day. So make sure you hit the bell notification so you can get notified. Anyway, let's get into it. Okay, so first of all, Grayscale was founded in 2013, and basically Grayscale found a way to fit Bitcoin and now other cryptocurrencies into a nice, neat little box that fits very regulatory compliantly in a way that lets other people more traditionally gain exposure to Bitcoin. Basically, it allows people to gain exposure to Bitcoin through their IRAs or through their retirement funds. They allow people to trade kind of Bitcoin on the stock market because Grayscale's Bitcoin Trust, also known as GBTC, is publicly traded on the NASDAQ. It is a trust fund, so basically Grayscale owns a whole bunch of Bitcoin, and if you qualify, you can invest in shares of that trust that is representative of the underlying asset that is Bitcoin. It doesn't track the price of Bitcoin perfectly. In fact, there is a history of both extreme premiums and even negative premiums as well. Basically, it's trading lower than the market price of Bitcoin. There's concerns for that. I'll get into that later. But yeah, basically, Grayscale has figured out a way to bring Bitcoin to the stock market. And it's gotten a lot of the traditional people really excited because they can, play with the risk of Bitcoin. But actually, this particular way of getting exposure to Bitcoin adds an additional layer of risk for a number of different reasons. Grayscale has figured out how to be the third party in between people and their ownership of the real ownership, actually, of an asset, the hardest asset that's ever existed. So you might be able to tell my little waiting for the squeak toys to end. You might be picking up a little bit on my own bias of things like this. There's nothing better, in my opinion, than being able to truly own something in your life, and Bitcoin grants us that amazing opportunity to do so, to lock away our investments, our wealth, in a very autonomous way. And Grayscale is just trying to please both parties, basically. There's also some irony here, is that they try to market this GBTC shares as being easily transferable. Yes, in the traditional way, in the old way that things used to be able to work. There's now much better ways now, but anyway, yes, like you can transfer these shares because you have a contract that has officially assigned your name to them and your ownership in that way. But the irony here is comparing it to the actual ability of transferring cryptocurrency in a peer-to-peer fashion whenever you want, whenever you want, to whomever you want, for whatever reason you want. And depending on the wallet you're using, you can even choose how much of a transaction fee you're going to pay. So again, there's some market differences between really participating in cryptocurrency and doing so in the more traditional, neat little box package of something like a trust fund that Grayscale is providing. So who can invest in the Grayscale Bitcoin Trust? Who can invest in GBTC? You either have to be an accredited investor, meaning that you have to have, like, I think $1 million worth of your net worth, or prove that you've earned $200,000 for the past 2 years, or if you're a married couple with dual income, $300,000 for the past 2 years. And also there's a $50,000 minimum investment for this fund. I believe that is for private placement if you are an accredited investor. You can also gain exposure to this fund through a brokerage like E-Trade or TD Ameritrade, for example. I'm not clear if that $50,000 minimum investment applies to that to them as well. But also to note, if you are, an accredited investor and you want to gain exposure to this, you need to know that this investment product isn't consistently available. In fact, right now it's closed to private placement. So it does have some scarcity to it, and I think that is what actually contributes to the often premiums that we see of this trust to the actual market value of the underlying asset that is Bitcoin. So for example, right now there is a premium on GBTC compared to the actual Bitcoin. GBTC is more expensive compared to the underlying asset. So for some investors, that's a really attractive thing for long term. You know, they want to maybe do some arbitrage trading between that fund and whatever else they're trading on the stock market. Or, you know, if they're holding long term, they want to trade and make a profit long term. But here's why holding GBTC long term isn't, in my opinion, a good idea. First of all, there is a 6-month lockup period for this fund. Once you invest in it, you have to hold it for 6 months. Not to mention the fact that there is a 2% annual fee for basically them being the custodians over this Bitcoin. I'm not sure actually what justifies that really high chunk of a fee, because their custodianship solutions are provided by Coinbase, and they say that they keep them in cold storage. So if you're keeping a coin in cold storage, I'm not sure if this 2% fee is to pay the transaction fees of the on-chain transactions that are happening with Grayscale, if they have to pay all these employees that are being hired, all of these middlemen that are suddenly sneaking in and chipping away again at your investment, when there's a much simpler way to own Bitcoin, to truly own Bitcoin, to prove your ownership over it. And you can store it in cold storage yourself and save yourself that 2%. Anyway, not to mention the fact that the shares, the amount of Bitcoin that your share represents is degraded over time, because that also degradation is what's used to, again, service the custodianship over these coins and to service whatever it costs to run this fund. GBTC has also been called the most dangerous way to own Bitcoin by Andrew Left, someone who's definitely been kind of vocal about the negativities of Grayscale and this fund. But anyway, you know, Grayscale, of course, is justifying these fees and its relative traditional way of trying to implement Bitcoin by saying, you know, it's more convenient because you don't have to worry about storing your Bitcoin. It can be really fickle, you know, with the private keys and your mnemonic phrase. And what if you lose it? You lose your Bitcoin forever. You have a hardware wallet. You have to use your seed phrase to unlock your hardware wallet. There's a lot of kind of misconceptions that they're portraying to kind of probably try to overwhelm those who are already not very familiar with Bitcoin, let alone what it takes to store it. So of course they want to swoop in and act like they can take care of it. It's just a small fee. When in reality, actually truly owning Bitcoin is very attainable by anyone who doesn't have the most technical background. It is absolutely possible to store your Bitcoin in a safe manner. Not to mention the fact that it is very much worth your time to learn how to do this, because it's a really cool thing to participate in. Anyway, it's been called the most dangerous way to own Bitcoin due to those premiums that I was referencing earlier. Now, the reason why GBTC has most consistently been actually overpriced compared to the free market value of Bitcoin is because this itself is number one, a limited product. So there's even more scarcity kind of lent to it. For example, right now it is closed to a private placement again. Not to mention the fact that it's not directly tied to the price of Bitcoin. It is its own thing. Yes, Bitcoin is the underlying asset, but that is not what ultimately dictates totally the value of GBTC. So keep that in mind if you want to be holding Bitcoin, especially in the long term. Right now, what we're seeing with some relative volatility of Bitcoin, if we enter a bear market with Bitcoin, will your GBTC be hitting at a negative premium? Will it be below? Very recently, I think it was actually like maybe 15% below Bitcoin. So for those of you who have been locked up for 6 months and you finally want to take profit or you want to sell it, how long are you willing to wait before it actually hits that fair market value of Bitcoin. Also, it's worth it to note that in January of 2018, they initiated a stock split, which changed the amount of the asset that the shares represented from 1/10 to 1/1000th. So that was a pretty big stock split that happened, and who's to say that that won't happen again? Also, I'm going to go ahead and read this off. This is from a helpful article that I read. I'll post links to a lot of different of the sources of information I found for this information down below in the video description, but here we go. It says, the specifics are subject to change. The amount of Bitcoin held by the trust and the amount of Bitcoin per share is subject to change over time due to factors including shares issued and the 2% annual fee paid to the trust. For example, as of August of 2019, shares outstanding was 244,951,500 compared to in February 2018, it was 175,984,800. So that's quite a big difference in a relatively short amount of time. So it's just all the more reason to understand that your shares are becoming diluted over time, and why would you hold it long term other than maybe to just be trading it on the stock market, because trading Bitcoin on the stock market isn't currently available purely as Bitcoin, of course, it being a cryptocurrency and not a stock. And so for some people, that's like an exotic trade that they can be doing. Now, there's all this talk about regulations. Regulations are needed because it's going to bring an ETF. It's going to bring Bitcoin to a $10 trillion valuation market cap. Bitcoin needs regulations. That is false. Bitcoin can very well continue to function, and you and I as individuals can freely participate in transacting in Bitcoin as much as we want without any regulation. Who needs a regulation are the institutional investors. They cannot, some of them can't buy crypto. Some of them can, some of them have found out ways to get exposure to it through maybe Grayscale, for example, but institutional investors need regulation to get Bitcoin. We need to drive that through. We need to flip the script because it is completely the opposite way. Some people think we need Bitcoin, we need regulations for Bitcoin to hit higher prices. Bitcoin is at $65,000 this year without any regulations. So please explain to me how this happens. And let's please never discount the importance of self-regulation. But anyway, let's get back to the topic here. The main reason why Grayscale gets so much attention, and probably rightfully so, is just the sheer amount of crypto that they own. They own $44 billion worth of crypto, with $27 billion of that is just in Bitcoin. They own 654,000 Bitcoin. That's a lot. That's 3% of the total 21 million Bitcoin that can ever exist. Not to mention the fact that there's about, what, 2 to 3, maybe 4 million Bitcoin that are never going to be in circulation, that are lost or whatever, forever lost, never to be sold. Of the 21 million, they have 3%. If that number is knocked down even less, they have an even larger percentage of the supply of Bitcoin. That's huge. Now, the one benefit here is that Bitcoin, yes, you can affect, if you have a large supply of Bitcoin, you can start to affect the price if you wanted to on the public markets. There's lots of ways that people can manipulate the markets. In fact, I did a video series a few years back on how whales manipulate the price of Bitcoin. If you'd like to check it out, it's for you right here in the upper right-hand corner. But anyway, you can't directly affect the security of Bitcoin if you own a lot of the Bitcoin, like securing the network and confirming transactions. If you own a lot of the supply, it doesn't directly affect your ability to do that. Now, when you're talking about proof of stake coins, like for example, Ethereum is shifting over to, there's a lot of proof of stake coins out there, but basically based on how these networks are designed, it could be that the more coins you have owned, the more control you have over the network. So they have an Ethereum trust as well, Grayscale does. And Ethereum is moving from proof of work to proof of stake. Now they do have a set of 32 Ethereum that is required to run a node that is used to validate transactions and to help secure the network of Ethereum. 32. If you have any more, it doesn't grant you any more voting power. Basically, 32 is it. So that's their way of kind of limiting the power grab situation. Grayscale currently has about $10 billion worth of Ethereum in their possession. That means at today's prices, they have enough Ethereum to be able to run 10,000 nodes. That's a lot, especially when you consider the current amount of nodes that are running the Ethereum network now are at 3,610 nodes currently on the Ethereum network. That means Grayscale alone is basically able to triple, outnumber those nodes by 3. At today's current prices, if they were to do that. Now, granted, if they were to lock up all their Ethereum right now, they would have to wait for that unlocking period to be able to liquidate those coins. And I highly doubt they're doing that because of just, you know, they need to buy and sell Ethereum to satisfy those trusts and those who are investing in it. But that is a big concern for anyone who cares about the security of the cryptocurrency that they're owning, that they're hoping to own for long term, that they're hoping to see continue to be disruptive, and to do that they need to be decentralized. So hopefully, I'm assuming here that Grayscale understands that it's actually going against their own best interest in holding that asset. If they were to run 10,000 nodes and to ultimately control the network, they would be dooming Ethereum, the very thing they're trying to earn an interest, they're trying to earn an income from. Basically, what I'm trying to say here is I'm encouraging you to be careful who you're rooting for. Be careful what you're being clouded by and what you're impressed by. Because with cryptocurrency, it is still a relatively new development. It is increasingly becoming more disruptive and getting the attention of many more people. And that's why the level of decentralization should be at the utmost importance level for anything that wants to survive long term. Anyway, those are my 2 cents on Grayscale Trust. Hopefully you guys found this one to be informative and a little bit enlightening. If you did, I appreciate it if you hit the like button and hit subscribe with the bell notification turned on. Sometimes YouTube gets a little tricky and they switch it off for you. So you can get notified when these videos come out. We're pumping out videos every single day. So if you're into getting your daily fix of all things crypto, hit subscribe. Anyway, I'll see you again real soon. Stay happy and healthy.